Good morning, everyone. My name is Khoa, investment consultant from Long Industrial Park. We are now in a panel discussion focusing on how we can overcome the crisis called coronavirus, which has been directly impacting the industrial real estate market in Vietnam. It's my pleasure to introduce to you two experts from international consulting firms, Mr. John Campbell, Manager Industrial Services, Savills Vietnam, and Mr. Trent Davies, Manager International Business Advisory, Dezan, Shira, and Associates Vietnam. Thank you for joining us today.
Thank you very much, Khoa. It's a pleasure to be here, and thanks a lot to Dezan, Shira, and to Long Hao Corporation. Just to briefly introduce myself first, my name is John Campbell from Savills, Vietnam. Savills is the largest foreign property consultancy and real estate advisor in Vietnam. We've been here since 1995, and my department, the Industrial Services Department, is the company's newest service line, established in 2017. So, pleasure to be with you all today.
Hi everybody, my name is Trent Davies. I'm the manager at Dezan, Shira and Associates in Ho Chi Minh City. I've been in Vietnam for 7 years now. I originally worked with the Australian government here, assisting Australian businesses to enter the market, and now manage the international business advisory at Dezan, Shira and Associates. Our firm is a one-stop shop for foreign investors looking to enter Asia. We have offices around the region, typically helping companies to understand the markets they're looking to invest, assisting with the company incorporation, and then with all their accounting, tax, payroll and HR issues as well. It's a real pleasure to be on the call today with our friends at Long Hao and at Savills. So thanks, Khoa, and thanks, John.
Thank you, guys. Okay, well, let's kick off the discussion today with some information on how COVID-19 has currently impacted operations of enterprises in industrial sector. According to a former government advisor, the COVID-19 could cause Vietnam GDP growth rate to drop by around 1 percentage point for the year, despite the government's current refusal to lower its target. Manufacturing, which accounts for 20% of GDP, is also struggling as producers cannot import materials from China. According to a survey, about 70% of enterprises in the manufacturing sector currently are operating at or above 70% of normal capacity, and 70% are operating between 50 to 70%. 13% are operating below 50% of normal capacity. This could reduce industrial production by 2.3 percentage points this year, knocking 0.5 percentage points off GDP growth. Long Hao Industrial Park has more than 200 enterprises, among them 50% who target EU, US, Japan markets must postpone the business due to COVID-19. The remaining 50% aiming to Vietnam and other markets with least impact by the virus have still maintained normal operations. However, with a significant drop in revenue, some of them had to make redundant cut down expenses. A few investors even asked for support in rent. Small and medium-sized enterprises focusing on ready-built factory are more vulnerable than a bigger investor with bigger funds for industrial lands. As we all know, these are consequences caused from travel bans by authority. In the region, most of transactions are routed long before the outbreak begins, with fulfillment rate at 72%. COVID-19 has brought disturbance to every corner of Vietnam's economy, and industrial real estate is not an exception, as we can see. But sooner or later, the virus will end. So, Mr. Trent, do you have any optimistic prediction on when the outbreak will hold its negative effect on the economy in general, and industrial segment in particular, and in which way?
Thanks, Khoa. I'd initially like to just state that it's been really fantastic to see Vietnam's response and management of COVID-19. It's truly one of the best performing countries in the world, in my opinion, in regards to disease prevention and management of the virus. To have a population of almost 100 million people and so few cases and no deaths so far is an outstanding achievement and something to be incredibly proud of. I think, unfortunately, given that the economies around the world are so interlinked and so global these days, though, even with Vietnam's excellent response, there's still going to be continued disruptions to business. In Vietnam, the next stage is particularly important as things feel like they're returning to normal. It's very important that businesses and governments aren't complacent, that people continue to abide by the rules, because we still don't know a lot about this virus and its ability to mutate or to pop up again and have subsequent outbreaks. What happens in terms of COVID in Vietnam is going to depend on a couple of factors. Vietnam's on the cusp of actually being able to eliminate the virus. And it's very, very few countries who went down this path because it's a very, very hard thing to do. So with very strong measures, Vietnam could potentially reduce the number of active cases in Vietnam to zero. The issue, if they choose to do that, is that they then have to avoid any reintroduction of the virus in Vietnam or any potentially large outbreak if it does come back in, which means until there's a vaccine, we can't really open borders. And if we were to reopen borders, then we'd have to look at imposing very strict measures to manage people coming into the country. So either 14-day quarantine periods or strict health checks before they enter. In such a case, which is likely, people are still going to be deterred from entering Vietnam. So both tourists and business people are going to struggle to come into Vietnam if that approach is taken. Alternatively, if Vietnam doesn't eliminate the virus, but instead chooses to manage the spread of the virus, then they can work towards a herd immunity. If this is the case, then there's still the potential for social distancing measures. There's still the potential for parts of the economy to be shut down in segments moving forwards. So it is going to be a long road until we get through this. That said, Vietnam's success domestically and internally means there's advantages and there's opportunity for Vietnam compared to other countries who aren't performing as well. So inside Vietnam, we're seeing the domestic economy begin to open, which will mean services, purchases, consumers will pick up, which is good news for the third and fourth quarter of this year. In fact, I think Vietnam has done so well compared to others that the International Monetary Fund has forecast Vietnam's GDP to grow at faster than any of its regional peers. That said, they are sort of looking at somewhere around 3%. Others are more optimistic. They're looking at 4 to 5% growth this year. That's in comparison to, say, 7% in previous years. On the bright side, though, the ADB is predicting that Vietnam will grow by nearly 7% in 2021. The World Bank is saying that growth is going to rebound above 7% next year. So there's some really good news ahead for Vietnam. It does require, though, that companies are very careful to manage their international partners in case of any disruptions. The other thing we are seeing as a consulting firm is many of our foreign investors are putting on hold expansion investment plans, just given the general uncertainty around the world. So in discussions with our clients, they're waiting for greater stability before proceeding with investments. And it's our feeling that we'll start to see more investments picking up in the third and fourth quarters of this year before really accelerating again next year very quickly.
Thank you for your useful information, Trent. So we can see that in the short term, this sector will be negatively impacted with a delay in production and a breakdown in supply chain. Can we have a chance to spot any silver lining in the long run of industrial real estate, Mr. John?
Yes, I believe so. Firstly, as Trent mentioned, Vietnam has responded in a very honourable manner to the situation as a whole, and I believe The country has a lot to look forward to in the long term, despite the current pandemic, especially with the recent ratification of the EU-Vietnam Free Trade Agreement and the EVIPA. So the EVFTA promises improved market access upon the country's rebound. This is sure to present excellent opportunities for Vietnam and enables its manufacturing sector to continue its transition towards higher value industries as new countries and new sectors are beginning to look at investing here in Vietnam. As for silver linings directly related to the pandemic itself, I would say there will be an increase in the acceleration of manufacturers moving their operations from China to Vietnam. As an alternative to China, Vietnam has a stable government, previously a very fast growth rate despite taking a big hit with the pandemic, a stable business environment, and of course a robust rising middle class. So the truth is, after the COVID-19, many multinationals are going to be under pressure to cut costs, and this is going to prompt a shift in production to Vietnam or other Southeast Asian countries. Previously, companies were reluctant to set up their operations in Vietnam due to the supply chains here lacking depth. But FDI companies now not only have an incentive to establish new factories in Vietnam, but they have a greater incentive to foster the development of local supply chains as a whole. So I think some very interesting opportunities in the long run for Vietnam. Finally, I mean, another point is the wage inflation. Traditionally, after pandemics, there will be wage inflation, and if this happens in China, that's going to be another reason for companies to look to move to Southeast Asia to cut costs if China's labor costs rise even more.
Okay, thank you, John. China has become a leading manufacturer of goods in the world, but economic changes in the country are now causing a shift in thought. For instance, wages for Chinese workers have tripled over the course of the past decade. This is causing manufacturers to move out some outsourcing to countries where worker wages are still low. As a result, China's economy has been slowing. The China Plus One strategy is about still using resources allocated in China but adding lower wages to the mix. After COVID-19, this trend will be surely more enforced. How will this trend occur in Vietnam upcoming time, especially in industrial real estate, Mr. Trent?
Thanks, Khoa. Indeed, China Plus One is a very popular trend, particularly given the US-China trade war and the increase in tariffs for companies exporting from China to America. Alongside that, I think companies were already choosing to leave China, as you mentioned, due to wages increasing. But many foreign companies in China also felt that it was becoming harder to do business in China. The government was becoming more closed towards foreign investment and foreign companies. Conversely, Vietnam is just such an open place. They're so proactive in how they approach trade and policies. The government's very stable. And so when you combine that with the low wages and the other benefits that Vietnam can offer, China Plus One strategy makes sense. And so for anybody on the call who isn't as familiar with the China Plus One strategy, essentially it allows companies who manufacture in China to supplement their Chinese operations. And this is because no one can flat out replace China at the moment. China has such a large workforce and it's got such deep experience. It's got very advanced supply chains that a lot of the developing countries that offer cheaper wages can't actually offer the same level of quantity or quality of suppliers. But it does enable companies to move some of their supply chain. They can remain in close geographic proximity to China and their suppliers there. They can reduce costs by leveraging the cheaper labor forces as discussed, and also the business environment. And they can also make access to Vietnam's many free trade agreements. Vietnam is very proactive in that space. As many people know, the Europe-Vietnam free trade agreement should come into action in around July this year, or Q3. And they're also part of all the discussions for the regional comprehensive economic partnership and many others. The other thing that we're seeing from issues like the trade war and the pandemic is companies need to diversify and reduce risk in face of these events, so they're not as affected if one country has to shut down due to a pandemic or due to some sort of political dispute. I think Vietnam's already emerged as one of the biggest beneficiaries of China Plus One. FDI soared in 2018 and 2019. We saw growth each year of about 7%. And typically the largest recipient of foreign investment in Vietnam has been the manufacturing and processing industries, followed by things like real estate and retail and wholesale. This year, I do note though that energy has seen a lot of investment, particularly given a massive investment from Singapore. And I think it is actually the biggest recipient at the moment. So we may see that as a trend, so more energy investment moving forwards. So this trend is going to accelerate after the pandemic for a number of the reasons that John mentioned. As I think mainly companies continuing to look to reduce their cost and to mitigate risk. For Vietnam, one complaint I guess we've been hearing is in the second half of last year, companies couldn't find the ready-built factories, they couldn't find the space they needed, or they were struggling with the lack of suppliers, the depth in the supply chain, and some infrastructure challenges that Vietnam has. That's one of the actual downsides, but it speaks to Vietnam's popularity as an investment destination, and this high level of demand is what's creating those problems. One positive out of this COVID-19 situation is that it's actually going to allow Vietnam some breathing space and developers to address some of the infrastructure issues, and it's going to allow local companies to fill the gaps and create a deeper supply chain for other companies. And so I completely agree with what John said. I think this is going to accelerate. More and more companies are going to leave China. New companies coming into Asia or new manufacturers, they're not going to, I don't even think they'll consider China moving forwards. They're going to look at places like Vietnam as well.
Yeah, great. So how can investors benefit from this trend?
So foreign investors particularly are going to benefit from, I think, Vietnam's stability, their proactive approach to foreign investment and trade. Vietnam is doing everything they can to improve the ease of doing business. So the foreign investors already in the country are going to see improvements in terms of the opaque and the complex laws, the excessive bureaucracy. There'll be improvements in things like customs procedures. The Europe-Vietnam Free Trade Agreement also has investor protection in place, which is going to create a better environment for companies entering restricted industries or more complex industries. Better infrastructure, so there's a lot of private money going into infrastructure development as well, as PPP partnerships and so forth. And I do think that Vietnam's supply chains are going to become more advanced. With the foreign investors already here, Vietnam's very entrepreneurial, and the staff working for these big investors are learning, and they're seeing the gaps, and they're actually going to private equity funds, and they're asking for money to set up companies to actually fill some of these holes and some of these challenges that companies are having. So I see benefits for foreign investors, I see benefits for local companies, and I think, yeah, it looks very positive once this pandemic sorted out for Vietnam.
Yeah, thanks, Trent. And optimistically, EV FTA and EV IPA will expectedly be passed in May by National Assembly of Vietnam, and listing price has indeed increased 6.5% in first quarter of 2020 due to high demand in looking for industrial lands and factories. Although we are still in the middle of the outbreak. So what are opportunities for industrial project developers in Vietnam after the outbreak, Mr. John? Or what do they need to do to get ready for the new wave of investment upcoming time?
Thanks, Khoa. I believe the long term presents an array of opportunities for industrial developers in Vietnam. Firstly, as Trent touched on, with new FTAs or free trade agreements in place, we expect IP developers to witness a growing interest from European manufacturers from 2020-2021 onwards. As demand continues to outpace supply, particularly in key industrial provinces, with occupancy reaching 75% in all operational parks nationally, the competition for well-located manufacturing plots near the country's main cities and ports has increased. So this, coupled with an influx of new international manufacturers, gives developers the right land bank the opportunity to strategically choose their occupiers and lease it to multinational companies in high value added industries. So this presents some interesting opportunities for the industrial park developer here, that they can choose the quality of their tenants, which is something that we haven't seen in Vietnam in the past, whereby plots were leased out to first come, first serve. Secondly, demand for industrial properties is forecast to rise sharply. As I mentioned earlier, foreign companies may shift their plans from China to neighbouring countries, including Vietnam, as industrial production has been quite stagnant in China because of COVID-19. Third, I expect a rise in demand for build-to-suit solutions from IP developers by occupiers. So I believe many multinational corporations and global occupiers will be more cost conscious after the pandemic, and they may opt for shorter term rental opportunities that are light on capital expenditure, such as BTS or build-to-suit. So we're only starting to see our first high-profile BTS projects in Vietnam's industrial sector in the past 2 years. A good recent example is Best's with their recent build-to-suit, which was done by BWID. So I think we're going to see more of this demand for developers to have the capability to do BTS solutions, and therefore IP industrial park developers will have to diversify their offerings away from just RBF, ready-built factories and land leasing. Finally, there's some interesting research from BIDV Securities. So they found that IPs and industrial properties are among the most resilient industries amid the whole COVID-19 pandemic, and are forecast to remain healthy as demand for industrial land is set to keep rising. Cash availability for IP developers is quite substantial, as companies often receive prepayment from customers to lease plots in their parks. The research also goes on to suggest that the industrial property developers would also be eligible to keep operating for 220 months, even if the pandemic situation doesn't recover, which it already has. So actually, I'd be quite interested, Khoa, to hear from a developer perspective, what has Long Hao prepared to get ready for the manufacturing shift towards Vietnam in the upcoming time? I think Long Hao's input here would be quite interesting from the developer perspective.
Yeah, thank you for the question, John. Being highly aware of these dramatic changes, Long Hao Industrial Park has been developing high-quality products for different kinds of factory, logistic, warehouse, supported by 24/7 client service, 360 virtual experience on website, and many other value-added services like trading center, dormitory, internal clinic inside the industrial park to appeal investors. Furthermore, we also enhance quality standards for factory, develop a wide range of factory products like ready-built factory, build-to-suit factory, as well as we also ensure stability of labor force, focus on products customized for high-tech industries like such as high-rise factory and our new generation factory in Da Nang High-Tech Park. We also invest in logistic properties like warehouse, cold storage, and focusing on enhanced services for laborers, including recruitment, training, healthcare, and accommodation for the laborers. And the changes after the pandemic are inevitable. So what kind of change we will witness in the way people do business in the industrial sector, John?
Yeah, thanks, Khoa, and thanks for the answer about Long Hao's strategy. It's quite interesting to hear what the industrial parks are thinking and get your perspective. With regards to what changes people will be making post-pandemic in the way they do business, I mean, I guess they'll have to have quite a strong focus now on the long term. People really need to think long term. Of course, the pandemic makes businesses think about their business continuity plans and so on, and especially financing becomes more of an issue and cash flow is more concerned. People understand now that these disruptions can have a significant impact on business if they're not prepared, or if they don't have the proper continuity plans in place. So I expect occupiers to be more cost conscious. Probably in the short term, we'll see some property owners, some occupiers that already own factories, maybe look to sell the assets to free up capital and then start renting the units. So maybe, and I hope we see some more sale leaseback transactions occur in Vietnam and some new transactions take place in the market. Overall, I think it's actually going to, for the real estate market, I think it's going to diversify the type of projects we see in industrial. So more BTS, like I said, more shorter term rental, perhaps more sale leasebacks as well. So I think it'll be interesting to see how it all pans out.
Yeah, thanks, John. So there should be tons of things that we should prepare to get ready for this. So what do investors need to prepare for the post-outbreak period, Trent?
I think investors need to really focus on right now and the current, if they haven't already, as their first step. So while we're seeing positive signs around the world in countries like Vietnam, companies do need to be careful of another outbreak. They need to be careful not just of their own business's health, but the health of their suppliers, of their customers, of other countries and other impacts that they're going to see. And so as John mentioned, business continuity plans are extremely important for the time being. So looking at things like what do they do if there is a disruption to their supply chain? What do they do if one of their customers, one of their biggest customers, stops sending through orders? Do they have the cash to be able to protect themselves? So initially looking at the health of their customers, suppliers and business partners, looking at the health of their landlords as well, potentially to protect their factory space or their warehousing. And then looking at the finances, because there's going to be a lot of opportunity coming out the other side of this. So companies who come out in a strong position, who protect their business, are going to have the opportunity to benefit from things such as an increased market share, acquisition and investment opportunities. They potentially could even look at having more workers join their companies. And I know there is a lot of, there's a bit of a shortage for labor in some industries. And it's quite competitive to find workers. And so there may be opportunities to pick up more people now as other companies are making people redundant or downsizing. So I think the key focus that we're talking to our clients about now is how to plan for that future situation. So financial planning, acquisition target identification, legal review of contracts, those sorts of things are really important.
Yeah, thanks, Trent. So how do you think about this, John? What do we need to do to prepare for the post-pandemic recovery upcoming time?
I think Trent covered everything really. I think I think the importance of the financial health checks, as he mentioned, and the strong attention to business continuity plans will become even more essential. As I mentioned earlier, long-term planning and vision have never been more important. Like with that said, we'll probably see some occupiers become more conservative with capital expenditure, which could result in demand for shorter-term rental solutions and build-to-suit and so on. So yeah, interesting to see how that will impact the industrial property segment.
Yeah, thanks. Thank you for your great information. We have one question from an audience about FDI attraction. Our competitive advantages compared to other Asian countries in attracting FDI tenants, including rental price comparison? Can you answer that question, Mr. Trent?
Sure. So I think certainly things like rental price, utility price, all those sorts of things, I think similar to other competitors, say like Indonesia, Philippines, Cambodia, there are various cost differences among all the markets, but the key advantages and the reason that Vietnam has done so well in the last couple of years is it offers a much more well-rounded solution. It sort of ticks more boxes on as a whole and then many of the other markets. So our clients are often looking at manufacturing feasibility studies comparing Cambodia, Indonesia, Vietnam, Philippines. And the majority have ended up being in Vietnam unless there was a specific reason, such as a certain supplier or industry that they wanted to leverage. Vietnam benefits from a really stable government. I think it's an interesting thing seeing Vietnam's government do so well and be so proactive towards things like trade. They've revised their investment laws. Ever since they joined the WTO, they've been improving the ease of doing business. I think companies feel safe here, they feel stable. It's a large workforce compared to, say, somewhere like Cambodia. Vietnam's shifting from low value add to added value. Industries such as automotive, aerospace, electronics, they're all going to improve the skill sets here. More investment into research and development will be seen, and all of these are going to create a really strong place for foreign investors to invest. So I might also throw to John to see if he has anything else to add to that.
Yeah, thanks, Trent. I mean, it's a good question. It's something at Savills, we received this question quite a bit. Why Vietnam, especially compared to its regional counterparts in Asia and Southeast Asia in particular? I mean, Vietnam has a number of competitive advantages and traditional drivers, such as, of course, its labor costs, which are at the moment 1/3 of China's costs. Affordable land and rental prices at the moment, although they are rising in the key industrial provinces, they still remain quite competitive. Favorable corporate income tax incentives and preferential tax incentives for certain high-tech industries, supporting high-tech, or if the project is within a special economic zone. So good opportunities there for tax savings. I think Trent mentioned what Vietnam's large and young population. So Vietnam has 96 million people and a very young population too, which gives rise to a dynamic workforce, which is very enticing to multinational companies with long-term vision. Geographical location near source and destination markets is very important for Vietnam's logistics performance. So Vietnam is located on the southeast of the Indo-Chinese peninsula and has access to the world's major seaborne trade networks. So this is very important for the success of its logistics and obviously its exporting of its manufacturing as well. And overall, I mean, as an alternative to China in particular, Vietnam has a stable government, a robust and growing middle class, had a very fast growth before the pandemic of around 7%, which has taken a big hit, of course, but I think it'll improve again upon market recovery and return to its fast growth rate. And finally, an overall improving business climate. So Vietnam is becoming easier to do business in. There's less cumbersome administrative costs involved in custom duties. Everything is becoming more transparent now. So I believe in the next 5 to 10 years, we're going to see a completely different Vietnam.
Okay, we have some questions from audiences. Because supply chain is disrupted due to the pandemic and industries rely heavily from China, Vietnam encouraged to create more industrial clustering. What will be the outlook? So I think this question will be good answered by John.
Sorry, Khoa, could you please just repeat the last part of the question?
Okay, supply chain is disrupted due to the pandemic and industry rely heavily from China. Vietnam encouraged to create more industrial clustering, what will be the outlook? So we can see the question is what will be the future of for the investors, for the IP developer in the context that supply chain is disrupted.
Okay. Yeah, I mean, the disruption in supply chains in China, of course, is a big impact, even on Vietnam, especially in the first quarter of this year. Vietnam gets a lot of its inputs from China and raw materials, and so when the factories closed in January and February, that had a big impact in Vietnam. But overall, the disruption in supply chains, in one way, it's a bit of a silver lining for Vietnam, because the supply chain disruption in China means that companies not only will consider moving to Vietnam because it's a cheaper alternative for manufacturing, but now once they see the damage done with the supply chains in China amid COVID-19, they're going to make a more longer term commitment to Vietnam and actually commit to improving the supply chain, development of supply chain in the country as a whole. So in the past, we've seen a lot of companies in 2018 move to Vietnam to set up a factory because it's quite much cheaper alternative than China. And many other companies refused to move, saying our supply chain is in China, Vietnam can't replicate that. We're going to stay put where we are. But now some of those companies, after the pandemic, they have to consider Vietnam now and actually consider making an investment in the long term here, because the Chinese market is in trouble now after COVID-19.
Okay, thank you, John. So another question. How is Vietnam government approaching the recovery for FDI environment in? So you can articulate this the policies the policies applied from Vietnam government to improve the environment for foreign investment, Mr. Trent.
Thanks, Khoa. So I understand the questions around what's the Vietnamese government doing in terms to embrace the recovery. I think, as I touched on earlier, the initial management of the virus by the Vietnamese government has already been extremely good, which is going to protect the domestic industries and allow for a quicker recovery. Vietnam's always encouraged investment into particular sectors using tax incentives. So Vietnam offers tax holidays or tax reductions for certain periods of time, depending on where in the country people are investing, what industry they're investing into, and the size of the investment. So those tax incentives in some of the more the provinces that were at full capacity were actually being reduced, and while incentives were being encouraged for areas where they were looking for more investment. But I think it's quite likely that they'll continue to offer these incentives to foreign investors for the foreseeable future to encourage investment. And also internally, of course, the Vietnamese government has launched I think a $10 billion US dollar 10 billion credit support package for companies here. And so that's going to include policies for restructuring loan terms, reducing interest rates and fees. I think there are some tax breaks for people as well, so when they have to pay their tax or when it needs to be submitted, as well as a reduction in taxes, I believe. So these support packages will certainly help companies already invested, and those tax incentives I mentioned before will encourage more investment. The other thing the government are doing is they're looking at how do they improve the investment environment. I think the most recent one is the decision on electricity tariffs, which is going to see a lot more investors into energy be more comfortable with their investments.
Yeah, okay, thank you. Despite the negatives, some experts believe that COVID-19 has the potential to create some economic opportunities in Vietnam. Supply chain issues in China may help manufacturers decide to move more production into Vietnam, continuing a trend sparked in part of Vietnam's cheaper labor market and the US-China trade war. Industrial real estate is the least impacted sector in the real estate market, and the virus will enforce the emergency of diversification of investment portfolio and encourage the trend of shifting production from China to other countries like Vietnam. And we should look at this as a one in a million opportunity after the pandemic ends. Do you have anything to say to the audiences, Mr. John and Mr. Trent?
Yeah, thank you, Khoa. I mean, I fully agree. The whole situation is going to accelerate the movement from China to Vietnam. I mean, we've seen already, I think Apple have announced that its suppliers are going to set up a new facility in Vietnam already, and Foxconn have announced another facility. So it's already happening at the moment. And we can see why. You know, traditionally, Vietnam's key export categories have always been around 60% products low value added and 40% in higher value added, like electronics. So this is actually the perfect type structure for attracting FDI in the past for Vietnam. The low end products are expected to hold up well over the next 2 years with increased demand from cost conscious shoppers, and the higher value added products are expected to surge from 2021 onwards. Now, what this has resulted in is more the multinationals that produce these products are under pressure to cut costs. So that's prompting a shift in their production from China to Vietnam. So previously, companies that were reluctant to set up operations here because the supply chains lack depth, they're now coming back and considering it again. So more FDI companies have greater incentive to foster development here. And as I mentioned earlier, the wage inflation tends to increase after pandemic situations. So this is also prompting the manufacturers to leave China for Southeast Asia and Vietnam in particular. So I believe we're going to see more and more companies, not just the Apple, Foxconn, but we're going to see more and more multinationals announce their plans and interest in Vietnam very soon.
Thank you, John. How do you think, Mr. Trent? Before we can close the webinar, what advices do you have for the audiences in the context that the pandemic is about to go to the end? So what do you have anything to say to the audiences?
Look, no, I think as we mentioned before, we've covered the real advantages of Vietnam. We are confident we're going to see a lot of interest in Vietnam. We just encourage companies not to get ahead of themselves and to carefully prepare now and manage things. I will touch on one point around labour. John mentioned labour and competitiveness. I noticed there was another question which came through earlier around is labour going to inflate too much, and then is that benefit actually going to subside? It is an area people are concerned about. The wage inflation is probably going to be similar for all the countries in the region at similar levels. Vietnam will progressively become more expensive, and then companies will ask themselves, where's the next destination? You hear talk about places like Africa already. One thing Vietnam will need to address, and that is productivity of the labour force in line with the wage increase. So more investment into education, upskilling of workers are going to be very, very important as Vietnam moves from low value added manufacturing to higher value added. If they can do that, then I think Vietnam will continue to be a very competitive place.
Great, yeah. Okay, all right. Thank you for attending our webinar today. Goodbye, panelists. Thank you for your precious time attending, joining with us, and providing useful information for the audiences. So we now have enough information on what we can prepare for the next period of fighting against COVID-19. So thank you for your time.
Thank you, Khoa. Thanks, Trent, and thanks everybody for tuning in.
Okay, thank you. Thank you, John. Thank you.
Just a quick note to attendees. The webinar is recorded. If there was any issues with stability during it, you will receive a recorded copy of the webinar. And we will endeavour to get back to questions we weren't able to answer in our follow-up emails. So thank you, everyone.
Thank you. Goodbye.